Welcome to It's the Economy. Power stocks had a blistering 2023 with renewables, power equipment and smart metering companies like Inox Wind, HBL Power, HPL Electric, Transformers and Rectifiers, all of them rising 200 to 400%. Even stocks of the old power generators like, NLC, NTPC, SJV and Tata Power rose between 50 and 100%. What does 2024 hold for this sector? Will demand continue to rise? Will freebies and discom dues spoil the sector again? Which segment should investors look at? For all these questions, I have with me Girishkumar Kadam, Senior Vice President and Group Head at ICRA, Rahul Prithiani, the Senior Director at CRISIL, Market Intelligence and Analytics, and Harshvardhan Dole of IIFL Securities. Gentlemen, thank you very much indeed for your time. Well, let me start with you, Rahul. What's your sense about power demand in the 2024, calendar 2024? Does it look as good as it was in the last 6 months of 23?
No, I think clearly last 6 months of 23 was really an exceptional performance in terms of growth. We were close to about 9% or so. Even in this year, I think it was going to be fairly robust number. We are talking upwards of 7%. So I think by and large, the demand has been on a good trajectory ever since the COVID lows. And what we've clearly seen from a demand perspective compared to the previous 8-9 years that we saw, the demand trajectory in terms of growth from maybe a 4 to 6% has moved to, I would say, close to 6 to 8%, the way we are kind of, moving ahead, given the kind of strong demand that we are seeing from both the domestic sector as well as the commercial and the industrial sector. And we expect this to kind of, be the trend going forward and maybe a step change by 1 or 2% in terms of demand over the next few years is what we expect.
Okay, and Girish, to come to you, how is incremental supply panning out? We were all stunned by this buzz. It has not yet been confirmed by BHEL that NLC is going to put an order of 20,000 crore nearly, 19,000 crore to be precise. So that's a big one for thermal especially. How is supply panning out?
Yeah, so thanks, Lata. So if you look at from the sectoral standpoint, the under construction thermal capacity is close to about 25 to 27 gigawatt. And so that is likely to come up over the period of next 2 to 4 years. And this is largely happening within the CPSU and the state GENCO segment. So beyond that, we don't see any incremental investment plans getting announced from the private IPP segment. Because of the the concerns on the ESG front and the sustainability initiatives being followed by many of the private sector IPPs. But having said that, I must say that there is a strong revival in terms of having a focus on the incremental thermal capacity addition, especially from the government side. In fact, what we see is if the energy demand growth remains well above 6% over the next 6 years, certainly there is a clear need of incremental thermal capacity addition beyond what is there in the current pipeline. So based on the maths that we have done, if the demand growth were to remain at about 7 to 7.5% over the next 6 years, the incremental thermal capacity required for the sector as a whole would be close to about 65 to 70 gigawatt. That means once these under construction thermal capacity, assuming that comes over, there is a clear need of another 30 to 35 gigawatt of thermal capacity, by 2030, based on our estimates. And why the government has revived the focus to, to encourage the, investment participation even from the private sector.
Okay. Yeah, I get that. But, private sector not getting into thermal would prefer only renewables, and therefore state and center generating companies are more into thermal power generation. But I think Adani is still largely a thermal, producer. Maybe one should expect something from that. I do not know. But Harsh, before I come to you, one more question to the sector experts. Rahul, demand has always been good in India, but is it being backed by the power and the willingness to pay? That was the question. So, how is the finances of the sector, especially the generating sector, panning out? Has Discom Health improved?
Yeah, so I think a lot of changes have happened over the last 4-5 years from a policy standpoint with respect to one, to support the demand. I think there's been clearly from a government standpoint, I think the reach out power for all program has worked, plus electrification as well as the commercial and industrial segment robustness has kind of helped on the demand side. But coming to the other side, which is the willingness to pay and the generate dues for the generators, I think clearly what we've seen is from a policy standpoint, government coming out with the LPS scheme has kind of helped and ensured that there are more timely payments to the generators, especially the renewable side. I think there were a lot of concerns, but luckily all of that has really panned out pretty well. Now what this has meant is, in terms of overall efficiencies of the system, also need to go up from the discom side, and a lot of investment has been planned and has been going on. So to some extent on the margin, there is the ACS ARR gap clearly has fallen. Plus in the last year or so, I think with the coal prices getting moderated, we are expecting the ACS ARR gap to come down. But having said that, our kind of, willingness to pay to the extent that we see has on the margin gone up, but there are pockets of challenges clearly in segments such as agriculture. It will always be a challenge and it will be slightly, a sensitive subject, but generally for a better quality of power, at least we are seeing slight improvement in collections. But having said that, it continues to remain a fairly long road to kind of, come to a scenario where we reverse the ACS ARR gaps and kind of, things look very hunky-dory for the sector.
Got it. Yeah, got it. I have an ICRA note here which points out that the cash gap between per unit of the cost of supply and the tariffs that we get from the discoms is still about 40 pies. I mean, that's the loss that they are suffering. It is down from 80 pies that it was in 2021, but then 2021 was a COVID year. If you go beyond that towards 2018, we were still at about 47 pies. So all that we have improved is from a gap of 47 pies, we have come down to 40 pies gap per unit. So you can imagine it's still a sector which is suffering losses. So with this backdrop of excellent demand, some capex coming, and still losses because discoms are not paying too much, Harsh, let me come to you. In this, we ran all this stocks that have done very well, from the GTNDs and HPLs, right down to the Tata Powers and the JSW Energies. It's a rise of 50 to 400%. In 24, what kind of gains and for which parts of the power sector?
Lata, hi, thanks. Firstly, New Year greetings to you and all your viewers. I'd slightly be more aggressive when it comes to the sectoral landscape. So recently we had done a detailed analysis of the per capita consumption. And what we found out was India is exactly at a level what China was, say, a couple of decades ago. And this was the inflection point after which the power demand in China grew by, at 10 to 12% for more than 15 years. So India is basically at that inflection point. And the power demand can actually accelerate with bit of a policy nudge from state as well as the central governments. And I think we are at that tipping point whereby power demand can only accelerate. So I will be slightly on the aggressive side when it comes to power demand.
And when you give me the advice on stocks, also keep in mind that demand has to be backed by the willingness to pay. So what would your advice be?
Yeah, that's what I was actually referring to. So when you evaluate that opportunity, then the opportunity actually comes down to players who have willingness to invest and stay invested in the sector for more than 5 years. Because on a near-term basis, everything is fairly expensive. If that were the case, then companies like NTPC, Power Grid, Torrent, Tatas, and CSE are the companies who have got balance sheet and tenacity to be invested in the sector for a very long time. So these are the stocks that essentially actually filter our screen of governance, cash flows, and balance sheet. And amongst these, of course, NTPC is our top pick, followed by Torrent Power. And CSE, in my opinion, is the one which actually offers a very asymmetric payoff. So that's the one name that we are slightly on the aggressive side recommending.
Okay. I'll come back to you for the non-power generator discom sector also. I mean, the smart metering variety. But on that note, let me go to Girish and Rahul. Girish, which are the sectors that look well hydrated financially. Obviously, you won't give me stock recommendations, but sectorally.
Sorry, what you said, I missed the word.
Which are the sectors that look financially very viable at this point in time, or very lucrative?
Okay. So within the power sector, as I highlighted earlier, that we have a stable outlook on thermal sector. We have a stable outlook also on the renewable generation and the transmission sector, while we have a negative outlook on the distribution segment. Within the thermal sector, of course, larger share of the entities, they are based on the regulated cost plus principles. But for those gencos which have open capacity, they stand to benefit in the current environment thanks to the elevated short-term tariffs, both bilateral and the spot tariffs, and the kind of fair margin which is still available basis the variable cost of power generation using imported coal, and the fact that imported coal prices have also moderated over the last 6 months. So that's one. And secondly, because of the kind of capex opportunity which is there in the power sector, the direct beneficiary for the other sectoral class is the capital goods and the engineering, which would definitely stand to benefit through the growing order book because of the kind of capex that we are going to witness across the value chain, generation, distribution, and transmission. Yeah.
Okay. So that similar question to you, Rahul. We understand that the thermal generators now have a look in because Discom loans Discom overdues have come down from 1.3 trillion to about 70,000 crores. So some money has come their way. But besides that, the kind of stocks that went up were the HPL Electric, the GE T&D, the T&D stocks. So where would you say are the lucrative opportunities?
So I think, Lata, from an investment standpoint, if you look at a sector as a whole, I think there is a very large capex investment that is happening. And I think the renewable energy space is clearly the largest one, and that will have hog the lion's share with respect to generation. So I think that is one area which has also got access to capital, and there is also a lot of generally global investor interest also. So that remains a very strong pocket for investment. And on account of the renewables, you have significant investments that is likely to happen in terms of the transmission as well as distribution, as well as integration, storage, equipment providers. I think they will have the largest share of the opportunity going forward. Having said that, on the margin, relatively, if you just keep in mind in relation to the overall investment, I mean, thermal probably would be maybe, just about 10% of the overall investment opportunity. But even that will be significant given the size of some of these projects, and these tend to be lumpy, and it will give a lot of opportunities to equipment providers in this entire space.
Oh, absolutely. Very well said, Rahul. Last word to you, Harsh. You spoke to us about the generators and the Discoms. You spoke to us about the CESCs and the NTPCs. Among these equipment and renewable, say Inox Wind for renewable, HBL Power, transformers and rectifiers, HPL Electric, in this story, and perhaps even L&T and BHEL, where would your money be?
Yes, a house, I think we like L&T the most because that's, that's the best capex play in India. Amongst the other, vendor players, I think Suzlon and Inox Wind, they're coming out of financial distress and looking at huge runway for growth. And both these stocks, if the execution plays out well, are well placed to give phenomenal returns even from here on. Particularly Inox Wind. I think the way company has delevered itself and brought down the balance sheet to wafer thin level, story looks pretty interesting. And in my opinion, those two are the stocks to watch out in the whole space among the mid and large cap names.
Okay, unfortunately out of time. Thank you very much, Harsh, Rahul and Girish. What our experts tell us is that the demand scenario is excellent, and there has been some progress in the ability and willingness to pay in that the LPS scheme, the late payment scheme, and the RDSS are forcing state discoms and state governments to pay up dues. That's making life a little easier for the distributors like the CESCs and the Tata Powers and the Adani Powers. But going forward, it will not just be the the capacity created, but also continued emphasis of policy on discoms paying up. But the ecosystem of those who supply smart meters or transformer equipment are clearly having a very good time ahead as well. Wrap up on Bazaar on that note. Chartbusters up next.